Hi, this is your host, Andrew Raffel, the founder and CEO of Baintree Wealth Advisors. And I wanted to personally welcome you to Your Wealth and Beyond, a podcast that will empower you, the entrepreneur and business owner, with the insight and information you need to effectively manage and control your personal and professional finances. My goal is to help each of you get your fiscal house in order so that you can take your business to the next level. We're going to be looking at things through a financial lens. I'm going to help you focus on growing your business, building your wealth, and most importantly, finding purpose in what matters most. Welcome, everybody, to a brand new episode of Your Wealth and Beyond. I'm your host, Andrew Raffel. Today's episode is going to be more geared to my Arizona listeners. Now, those of you that are listening outside of Arizona here in the United States, still want you to think high level of what we're going to talk about and truly ask your CPA if your state is going to offer some of the wonderful benefits that Arizona does and allows for its taxpayers. So as we end 2018, right now I'm looking here, it's November 29th. And as always, how did this year get away from us? I don't know. It's a blur. We're running, we're gunning. Those of you that are business owners, we need 30 hours in the day. Those of you that are working executives, the same thing. Family life, football, all these fun things that are going on right now. But I think we got to dial in and talk taxes. And today we're going to talk about one that is a true passion of mine. And Arizona is one of the states that offers a fantastic tax credit. And as always, don't take this as tax advice. Make sure you talk to your licensed CPA, your advisor, etc. But if you are an Arizona resident, which many of you are, and you're not taking advantage of these tax credits, well, you're just missing the boat. There's not many no-brainers out there. But when we think about a tax credit, what it basically means is that you can't get away from paying your taxes. So in Arizona, let's say you owed the state of Arizona at the end of the year $10,000 in state taxes. Okay, you're going to have to pay that regardless. But what they provide is a tax credit on multiple fronts where you can direct some of those dollars to a charity, to an organization, to a school, and have it count directly against what you owe the state. So a credit is a dollar for dollar. So if you think about that, take a step back and say, well, I owe the state 10 grand and I can direct a portion of that to a charity or to a foundation, to an organization like Phoenix Children's Hospital. Why wouldn't I do that? Why didn't anybody tell me? I don't know that answer, but I know a lot of my clients, and here at Baintree, a lot of our clients didn't know about that. So here's what's going on. We're going to talk about the top 4 or 5. Inside of the show notes will be links. And if you have questions, you can reach out to us. But I encourage you to take advantage. The first one, it used to be called the Working Poor. Now it's simply called the Qualifying Charitable Organization, QCO. What this allows for is a single filer to direct up to $400 to a qualifying charity. Now, there are dozens, if not hundreds of qualifying charities. Inside the show notes, you'll have a link to see exactly what's out there, but any charity that you've been accustomed to or have a passion for is probably on that list. For a joint filer, it's $800. So again, think about that. If you owe the state $1,000, you direct $800 of that as a married joint filer. You're basically allowing yourself to direct it to an organization that you have a passion for, and you're covering a huge portion of the money that you were going to pay the state. Who knows what they were going to do with it? 2, the second one is called the Qualified Foster Care Charitable Organization. So foster care. This is relatively new. 2016 was when it was first created. This one allows you to actually direct a few more dollars. For a single filer, head of households, $500. For a married couple, it's $1,000. So if you think about that, between the working poor and the foster care, married filer can direct up to $1,800. Now, back in 2016, I don't have the updated numbers for 17, But over 136,000 Arizonians claimed this on the working poor and claimed over $60 million in combined credits. Now, because foster care was relatively new in 16, only 16 million, but I assume that went up last year and it will go up again this year. So inside the show notes, you're going to see exactly who you can direct those funds to, both on the working poor and the qualifying foster care. So guys, no brainer there, right? Now, again, if you live outside of Arizona, ask your CPA, do some research. Does your state offer the tax credits? Now, previously, what we were able to do if you were itemizing on your federal, itemizing your taxes, you were able to then get a deduction on this as a charitable deduction. Now, remember, a charitable deduction, a deduction is not as good as a credit, but it still reduces the amount of tax dollars that you pay. Here's a caveat that we're not 100% sure on now with the Tax Cuts and Jobs Act that took effect this year, is good until 2025 until they tell us it's not, is that we don't know if you can deduct it off your federal. So that's something that you may not be able to double dip, but even if you can't, why not get that direct credit and send it off to an organization like St. Joseph, St. Mary, like Ronald McDonald House. Great organization that we have a lot of ties to, which is UMOM, Jewish Family Services. The list goes on and on and on. So please, guys, understand that you can do these two in addition to what most of you already know here in Arizona, the school credits. And this is a question we get a lot is, hey, I did the school. Is that all I can do? The answer is no. You can do all of them. So let's talk about the schools. There's a public school extracurricular credit. This allows a single filer to do $200. What this helps for is, extracurriculars like band uniforms, athletic uniforms, field trips, things like that you know are going to help in the public school domain. For a married couple, it's $400. Now, with all of these credits, these donations can be made to the end of the year. You also have till April 15th when you file your taxes. So most people, though, try to push it over the goal line by the end of the year. 2016, the public school, over 153,000 Arizonians claimed it for a combined $46 million. Pretty strong, huh? The second school credit is the private school. And there's two that are related to this one. The first is contributions to the private school tuition organization. Now, in 2018, that amount is for a single filer, $555. And for a married filer, it's $1,110. Now, on top of that, they put this additional plus private school credit. And I don't know where they come up with these numbers, but for a single filer, you can do an additional $552. For a joint filer, $1,103. Now, again, I don't know where that number came from. If somebody knows, please shoot me an email or call us. But that means for a joint filer between the private school credits, the first and the second, that's up to $2,213. And for a single filer, you're going to be able to do up to $1,107. So think about that. You've got these organizations that need these monies, these schools that need these monies, and you owe the state X amount of dollars. Take advantage of this. Now, there's a last one that a lot of people don't know about. This one's called the Arizona Military Family Relief Fund. And this goes to, and again, the link will be there, the Arizona Military Family Relief Fund website. And you can do as a single filer up to $200 and a joint filer up to $400. These do need to be made by December 31st. And then I think there's a maximum of only $1 million in donations. So once they hit that point, they hit that limit, no more can be received, and they will actually send it back to you. So if you are going to do that one and helps those that have served us, you want to get that done sooner than later. So if you think about it, let's tally that up. We've got a joint filer that's going to max out all of these credits. They would be able, and I'm using the old calculator right now, guys, so hold on. Wow. So you've got up to $4,800, $4,813 that you as a joint filer can direct to these organizations, to these schools Again, you're not getting away from paying your Arizona taxes. You're just directing it to these organizations that are going to hopefully put it to good use. Now, do I know how and why Arizona is able to do this? Well, I think the why is that we're giving to charities, and overall that's going to help the state. But I really don't know how they can make up for a lot of that lost revenue. But bottom line is those are out there. You need to take advantage of them. Now, I've been a part of a group that supports this through the Support Arizona Youth Initiative. Last year, we helped direct over $1.5 million just through family, friends, etc., just educating them that it's out there. So we've got a link that's in the show notes that will allow you to go on there and utilize on the working poor and the foster care. You can utilize the website and you can direct the funds to multiple organizations under one payment. You can use credit card. I did mine a few months ago, but I got points with it. And then that's what you show your CPA, your tax preparer. There's a form that is filed on your state return to say if you did these credits. So make sure if you did them and you do them that you provide that information to your CPA, to your tax preparer, because they won't know and then they won't report it. And then you won't get the credit. So just keep great records, get it over to your tax preparer, make a scan of it, and take advantage of this. If you don't live in Arizona, ask if your state has some of these credits. If you do live in Arizona, make sure you tell your family, your friends, your colleagues, your siblings, your child, everybody. If we owe taxes to the state, why not do it? Now, again, if you don't owe state taxes, you can still do it. You're just not going to get the full benefit of a credit. Remember, credit is a dollar for dollar. So below me will be all the notes, the links. If you have questions, reach out to us. The email address is questions@baintree.com. You can reach us on our contact page. You can call us at 480-494-2750. Tax planning, you got to be proactive, not reactive. And if you wanted a full diagnostic, second opinion on what you're doing right now with your plan, not just these credits, but overall, are you taking advantage of the Tax Cuts and Jobs Act? Are you looking at Roth conversions? Are you understanding what your required minimum distribution will be in the future? If you're not doing those things, or if your broker or your advisor isn't doing those things, which many times they're not, the CPA isn't, we got to talk. We got to quarterback that. We got to get the CPA involved. We've got to figure out how to position so that you're maximizing and being efficient with your taxes and minimizing your future tax liability. So let's take advantage of where we are, which we believe is going to be this next 6-7 years, the lowest tax brackets, the lowest rates we're going to see in our lifetime. We don't want to be caught off guard. We want to be able to control our tax destiny as best we can. And to do that, you have to look at your situation. And you have to analyze it. Not what's right for one is right for the other. We've got wonderful software that allows you to see what the long-term effect can be if you're proactive on your tax planning. So with that, this episode was really built for year-end planning. I know it was targeted for Arizona, so I apologize for those of you listening outside of Arizona, outside of the United States. But it's important that we take notice of these things and you work efficiently with your advisor to make sure that you are taking advantage of everything that's out there for you and supporting organizations that you're passionate about. Signing off, but we're going to have another great episode later this month. It's going to be focused on SEO and just some great things on how you as a business owner, if you've got a side hustle, whatever you're doing, how you can position yourself within organic as well as paid search. So with that being said, happy planning, everybody. Enjoy the holidays, and we will be back later this month with a new episode of Your Wealth and Beyond. Take care, everybody.
Thank you for joining me for today's episode of Your Wealth and Beyond. To get access to all the resources mentioned during today's podcast, please visit baintree.com/podcast. And be sure to tune in later this month for another episode of Your Wealth and Beyond.